Hello, welcome to this week's economy. I'm your host, Dr. Vance Ginn. Pleasure to be with you today. Thank you for listening. Please check out my show notes page at vanceginn.com or vanceginn.substack.com. I'm recording this on August 24th, 2023. Got a lot of information to share with you today, so let's get right to it. The first thing is I want to look at what's going on in the markets. The Dow Jones Industrial Average is around 34,300 today, actually down some, 172 points as I'm doing this. S&P 500's at 4,403. It's up about 15% year to date, but we've seen some ups and downs, especially some downs here recently, as it was up, closer to 20% just early part of August, late July. So that's something we've been seeing there. If you also look at what's going on with crude oil is at $78.78 from West Texas Intermediate. That's down for year to date, just a little bit. Gold futures is up about 7% year to date to 1948. And the dollar-euro exchange rate is $1.08 per dollar per euro. And so basically that is up, meaning that the dollar has depreciated over the year, which is one reason why gold's up. It's also a reason why, when you're thinking about oil and how these things are connected, there's some changes there as well. And so we've seen a lot more, I think, uncertainty, a lot of things that are happening in the marketplace when you look at what's happening in China, but also here at home with our economy here in the United States. There's still a lot of uncertainty. And a couple of things that I wanted to mention about what's going on here in the nation is that there's an article in the New York Times from August 24th saying how Jackson Hole became an economic obsession. Investors and economists are watching the event this week closely. How did a remote Wyoming conference become so central? And it goes through a lot of the discussion that's happening between a lot of Federal Reserve members, presidents, even Jerome Powell, the Federal Reserve chairman, but a lot of other bankers and economists will also be there discussing the economy, what's happening for the future, how are they going to make sure they keep control over inflation, and what's going to happen with interest rates. And ultimately, what I hope they talk a lot about is on the balance sheet of the Federal Reserve. Right, it's still around $8.1 trillion from it's down from $9 trillion right after the pandemic, but it's still more than double what it was, around $4 trillion before the pandemic. So this is a lot of money that's still flying throughout the economy, and I still think we have a lot of underlying inflationary pressures that are out there. Even though the CPI shows 3.2%, remember the core, exclude food and energy, closer to 5%, and food and energy have continue to go up, especially gas prices, right? So I think we're going to see an uptick in the headline rate will continue. And so they don't have a good control over inflation. And while we're on the topic of inflation, I know we've seen like Jason Furman and some others that have been out there saying, we need the inflation target to be higher than 2%, which they have this, what's called FATE, flexible average inflation target, where it's at 2% today and has been around 2%. It's been their inflation target for quite a while now. But they're saying, look, we need that to be raised higher to 3%. And some argue, well, that's so that we can inflate away some of the national debt and also bring in more revenue. Although some of those all the brackets now after the Tax Cuts and Jobs Act, they were indexed for inflation. But it depends on what the rate that they're using, which the federal government uses the chain CPI, which adjusts for substitution effects and things of that nature. So it's a little bit different rate than CPI. So that's something else we want to be, take into consideration. But there'll be some good discussions that are happening, hopefully, at Jackson Hole. I'm hopeful that it will be that they need less government spending, less money printing by the Federal Reserve, and more free markets. We need to get back to capitalism. Come on, this is heading us in the wrong direction overall. There's another article at Axios.com. This is from August 23rd, the Fed's high growth conundrum, which kind of goes into what's happening at Wyoming and everything. When you look at the GDP now from the Atlanta Fed, which I've talked about before, it's still showing about 5.8% annual growth rate in Q3. The S&P Global Market Intelligence tracking estimate is at 3.3%. Both of those would show a pretty robust economy here in the third quarter. And it's interesting. Of course, these are estimates based on the latest data that are coming out. So there could be a lot of revisions between now and whenever the actual numbers are published, which will be probably late October, I believe. And so this is something else that we really need to think about. But remember that there's a lot of weaknesses that are out there as well. When you look at manufacturing, when you look at the survey index that are out there, the consumer sentiment is down. I think a lot of inflationary pressures. And we've also had interest rates go up from 0 to 5.5%, the federal funds rate, that target there. And so that has a lagged effect. Some of it's immediate because it changes expectations today. And so it changes some of the behavior of people and their investments and things of that nature, taking on projects. But it also means that there are other repercussions that are going to happen throughout the economy as this money goes throughout the economy and things start to slow down overall. So I think that's something that we really want to check out and keep apprised of as we move forward. I think that'll be really important there. Another thing that I thought was important is yesterday, on August 23rd, there was this report by the Bureau of Labor Statistics where they showed that U.S. job growth wasn't quite as strong as it appeared last year after this revision. Basically, there were 306,000 fewer jobs for the month going through March 2023. And so that means that there were about, little right around 30,000 fewer jobs per month than what they were expecting on average. And there was also a lot of change in the last couple of months. So I think we may see more of that. Now, this is because of these changes that they made here recently at 306,000, and it was almost 360,000 whenever you look at just the private sector alone. So some pretty massive declines here. This is a way to think about like what's happening overall in the labor market. And it's not as strong, right? It's not as strong as what some, including President Biden, would like for you to believe, that there's a lot of weakness out there. And this is based on the latest data that comes out, where it basically says, look, there's a seasonal adjustments that take place. Let's use the latest data that are out there. Let's make the revisions to the labor market. And that's where they count 306,000 fewer jobs created across the economy, which kind of goes through kind of my take that we've been in a recession, that this is, if not anything else, it's a stagflationary period with higher inflation, less economic growth, and the job creation here is now starting to reflect some of that. And I think it will continue to get weaker in the months to come. Whenever you think about the state's economies, last week I talked to some about the state level jobs report. I put out a report over at the Pelican Institute, Louisiana economic situation, August 2023, which basically my headline was, Louisiana has many fantastic resources with educated people, a century culture, robust ports, abundant oil and gas production, and much more. Yet poor public policies stifle this potential, highlighted by job losses in July 2023. The Pelican Institute's comeback agenda shows the path forward to let people prosper. So while Louisiana's unemployment rate is lower, but for the wrong reasons, as people continue to leave the labor force, and it's quite substantial. The labor working age population declined by 521 people in July. That's what this data is for. The civilian labor force declined by 9,527 in that month. It's down 15,000 since February of 2020. And so when you have fewer people out there, fewer people that also could be unemployed or employed, and the labor force is going down too, even though the labor force participation rate is about where it was, or actually a little bit above where it was before the shutdowns. It's well below where it was before the Great Recession in December 2000, the start in December 2007 of 61.5%. So that's something else that we need to be thinking about, is that the unemployment rate's down because the labor force is down. And so that's not a good situation there. Louisiana lost 3,900 jobs over the last 2 months after losing 3,000 jobs in July 2023 alone. So also not a good sign there. It was one of 10 states that lost jobs. 22 states were essentially zero, not statistically significant from zero. And a lot of the Louisiana's labor market by industry have shown job creation, except for other services and trade, transportation, and utilities. The rest are all up. But if you look at average weekly earnings, most of the industries are below inflation. So their real wage is going down. They can't purchase as much as they did last year. Total private was up almost 5%. So that was pretty high overall. Manufacturing was way up. Financial activities was way up. Professional and business services was not up by much. Education and health services not up by much. So that's where a lot of people still feel behind. And compare with neighboring states based on several measures, there continue to be major concerns with the labor market in other areas in Louisiana. Another one of those is economic growth, where growth has been very poor in the last few quarters. And even in the first quarter of 2023, real GDP growth was only 1.4% in this first quarter. And Louisiana's private real GDP growth was 1.3%. So a lot of concern there. And so finally, Louisiana's economy is weakening when it comes to labor market and economic growth. And the lack of improved public policies will continue to stifle the potential of Louisianans without reform. I'll put a link to this in the show notes page, but they really need to follow the comeback agenda of tax reform, spending restraint, and getting regulations right. Getting a lot of the government out of the way in so many ways will be really important. And last but certainly not least, yet last night was the first Republican presidential debate. It's an interesting discussion, a lot of darts, arrows thrown at each other throughout that process. A lot of talk about how former President Donald Trump wasn't there. But I think there was a lot of good discussion, some things that make me a little bit concerned, a lot of talking about war and things of that nature. And what I wanted, more peace and prosperity. But I think there are some good discussion about what should be done with the Fed. shrinking the Fed would be important, eliminating it right in the Fed at the end of the day, and things of that nature. So I think some were stronger than others. Like, I'm not going to get into who did best or not at this point in time, but I'm hopeful that somebody will have a pro-growth message that's shrinking the size and scope of government to get the government out of the way so we can have more opportunities to succeed and prosper, unlike what the Biden administration has been doing, because we've seen the results of what that's happened. Higher inflation, higher deficits, a lot more poverty. This is not the situation that we need. And so I'm hopeful that we can see some good reforms there. I'm a classical liberal, so a lot of times I may not necessarily agree with one from either one of the major parties, but it's something to be able to look at. I thought Adam Michelle from Cato Institute had a good post today, which I'll put in the show notes page. It's titled Tax Policy Missing in Action on Substack, where I think there should have been more talk about taxes. Look, 2025 is going to be a big year when it comes to a lot of your regulations that are going to be expiring, but also the individual income tax cuts from the Tax Cuts and Jobs Act of 2017, the Trump tax cuts, those will also be expiring. So there's going to need to be a renewal or more reforms that are taking place that really there wasn't much discussion about that at all. Yet that's going to be a key thing going into 2025 for whoever is going to be president. And at the end of the day, too, I would have liked to hear more about cutting government spending, restraining the growth, a fiscal rule, a spending limit based on population growth plus inflation as a maximum growth. It really should be below that. But these are the sort of things that we really need to hear from. I liked what we heard about energy and more abundant energy. We need more abundance, less poverty. Let's get people out of poverty and not more on government programs and dependency. Government should be the last line of defense instead of the first line of defense is families, communities, civil society. That's really the direction we need to go. So there are going to be more presidential debates. I'll have more on that later, but I'll leave that with you today. Until next time, let people prosper.